The first one, let's start with Synergen. Berhad is actually trading within what we call that. You can say a little bit on the sideway on the long term, but what I'm seeing is actually the stock has been quite fairly supportive, particularly within at the low and within sub 80 cents region. So multiple rejection within this level has created a series of new high-low structure, and you can see the stock is actually trying to go up after creating new high-low structure for the past 2 weeks. You can see the contraction in terms of two moving average is actually about to end as the buying interest is starting to picking up. Trading volume little bit on lighter side, but we're seeing quite a gradual improvement. Because of that, a breakout above 91 cent could actually kickstart a new upcycle. As for now, we put our technical resistance at 96 cent and 1 ringgit and 6 cent. Then we have Dayang continue and consistently trading higher. I'm using what we call the cloud as support, and you can see here the stock since breaking out above the cloud on August last year has been continue trading above the cloud. That means the current uptrend is still pretty much intact. The subsequent what we call that a series of corrective move was pretty much kept within the cloud, and we can see the recent pullback or so-called correction also was kept, particularly as the stock has been rebounded within a 137 region twice for the past 2 weeks. Yesterday again, along with the pickup higher trading volume and improvement in over the momentum, actually signal the stock is about to continue the ongoing uptrend. So because of that, we expect the stock to challenge the next resistance target at 155 cent, and the next target using Fibonacci extension measurement at 173 cent. Then we have a Lei Hong. Lei Hong actually has established a new high-low structure since September as well. A little bit slower in terms of how the trend unfolded, but we like when the stock actually start to building a stronger baseline right along 3 moving average of the year, turning so-called the earlier resistance into a much stronger support right now. The gain was backed by 20, 50 and 200 day moving average, and you can see yesterday gain has created a new high structure backed by high trading volume, improving reading momentum, suggesting the stock could extend the ongoing uptrend. So we put our next target at 31 cent and 35.5 cent. And then we have LGMS, the massive consolidation within so-called a triangle since September is actually could be at the tail end. The stock is actually approaching the major pattern neckline and also the triangle apex, and you can see here the trading volume also gradually improving, structurally also improving, momentum also turning much more positive. So we expect an upper breakout above at least 128 cent ahead. A breakout above this level could actually extend the next or the ongoing uptrend toward the next target at 138 cent and also 159 cent. And then last but not least, we have PA Resource. PA is actually our previous buy on 6 January. I think one big hitting a high of 35.5 cent, one bit lower than our second target, but at least again about 22.5%. The subsequent so-called pullback was pretty much kept within that 200-day moving average, suggesting the long-term trend has started to shift upward. So that means any corrective move earlier was kept. And you can see the stock is well supported, and yesterday again on the spike of trading volume along improving momentum is actually signal continuation of the prior uptrend. So because of that, we expect the uptrend to continue to trade higher, hence we reiterating our buy with the new and higher target price at 35.5 cent and 39.5 cent. Okay, so that's final stock today. Do 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 do.